Welcome to today's market report.
Global shares edged lower on Tuesday as new coronavirus outbreaks in Asia vied with strong US and European consumer confidence, and investors speculated about whether the Federal Reserve would accelerate its timetable to end easy monetary policy. The US dollar rose to one-week peak on safe haven buy-in, stoked by fears that the highly contagious Delta variant could derail a burgeoning economic recovery. MSCI's All-Country World Index shed 0.06% as declines in Asia's equities undercut new highs in US and European markets. The Nasdaq closed at a record high, boosted by technology stocks, and a government survey showing US consumer confidence in June hit its highest level since the pandemic started. European shares ended higher after data there showed economic sentiment hit a 21-year high in June. The Pan-European Stock 600 index closed 0.3% higher at 456.37 points. Investors are worried about the economic impact of the highly infectious Delta variant. Indonesia, Malaysia, Thailand and Australia are all battling outbreaks and tightening restrictions. And Spain and Portugal announced restrictions for unvaccinated British tourists. There are headwinds to risk assets performing well, but if we step back, we are still looking at equity indices that continue to hit all-time highs. According to InCapital, investors are also waiting for the US jobs due out on Friday, the results of which could influence Fed policy. Economists polled by Reuters are expecting a gain of 690,000 jobs for June, up from 559,000 in May. On Monday, Richmond Federal Reserve President Thomas Barkin said the US Central Bank has made substantial further progress towards its inflation goal in order to begin tapering asset purchases. Dow Jones rose 0.06% to 34,303.51. S&P gained 0.05% to 4,292.66. Nasdaq added 0.2% to 40,529.17. Oil prices rose as hopes for a demand recovery persisted despite new outbreaks of the Delta variant. Brent crude futures settled up 0.11% and US crude settled up 0.1%. Brent is currently trading around 74.65, while crude oil WTI is trading at 73.44. Gold was down 0.01% at $1,761.60 per ounce. On the FX front, the GBP-USD pair bottomed at 138.13 and then rebounded, trimming losses. It is trading near the 138.50 area, still in negative ground for the day, but off lows. The recovery of the cable was favoured by a pullback of the dollar across the board. Despite better than expected US economic data, the dollar lost strength. The unstable move higher in US yields contributed to the rebounding US dollar against GBP. The US 10-year yield spiked to 151% and then quickly retreated back to 148%. The dollar index hit weekly highs at 92.20 and now is struggling to hold above 92. The GBP-USD managed to remain above 138, however, it is still under pressure. The area around 138 is very strong support that if it is firmly broken, it could lead to an acceleration of the decline. The next area stands at 136.60 to 65. The March and April lows. A recovery above 140.20 is needed to change the short-term bias to the upside. Before that level, a strong resistance emerges at 138.90 and 139.50. Eurodollar looks offered below 119 ahead of Lagarde's speech. The sentiment around the European currency remained depressed and the pair sinks further into the negative ground, reaching at the same time new multi-day lows in the 118.80 to 75 band. No news from the bond markets, where US yields remain apathetic around 150%, while the German 10-year bond shows some signs of life in the minus 0.16%. Earlier in the European calendar, advanced inflation figures in Germany now show the CPI rising 0.5% inter-month in June and 2.3% over the last 12 months. Later, investors are expecting to follow Chairwoman Lagarde as she speaks in Brussels. Across the pond, the FHFA's house price index rose 15.7% year-on-year in April, and the S&P Cass-Shiller index rose 14.9% year-on-year. Whilst the dollar index is fiddling around 92 level, dollar-yen was 0.1% lower at 110.57, just below a nearly 13-month high of 111.11 reached last week. Aussie dollar dollar was up 0.2% at 0.7555.
This is today's market news. Thanks for listening. We'll see you next time.